Okay, folks, welcome to part two of the Inner Circle Traders Market Maker Collection. This is volume 2 in a series of 12. This particular module, we're going to be dealing with integrating commitment of traders data and institutional order flow. Now, if you haven't already seen my older teaching as it relates to commitment of traders, I did two topics specifically dealing with commitment of traders. One was way back in 2010. I dealt with just simple core concepts to kind of like more or less warm up the audience that had recently at that time subscribed to my materials and resources that were making available on the internet and YouTube. And then I had a later, much more comprehensive teaching as it relates to the Commitment of Traders report. And I believe the title is How to Trade Forex Like the Professionals. And it was dealing specifically with the Commitment of Traders, CFTC data, and looking at the net positions and um, whether they're net long or net short basis, the Commitment of Traders graph that usually is accompanying many of the weekly charts that provide futures price data. But I'm confident that there are certain things that were left out that will be beneficial to you as we discuss it here as it relates to institutional order flow. And when is a net long or net short collectively in the commercials valuable to you as a trader? What prognostication does it give us as a trader? Because there's many times that the commercials can be net long or net short and really just be hedging in the marketplace and not necessarily mean that it's uh, a definitive good buy or good sell at any given time. So let's take a look at the beginning slide here in this presentation. And again, we're going to be talking about the net traders position chart. And on the left hand side of here, we have the weekly Australian dollar. And I used the futures data. This is the cash price, okay? But I'm showing you how you would use the futures price with the currency pairs in the spot market. For instance, the Aussie versus the USD, using the futures commitment traders report and graph at the bottom on the left hand side, you can arrive at a discernment whether or not fundamentally commercials are bullish or bearish on that particular market. And on the right hand side here we have a daily Australian cash price with the COT plotted as well. And we would use the same analysis concepts with the Aussie USD with the understanding that we're sharing here. Now in pairs that are showing the Australian dollar or whatever particular pair that we would be studying in the futures market as the secondary in the pair, for instance, like we're discussing here, Aussie USD, if instead of the USD, say it's the Australian dollars being plotted against another pair as the base, that would obviously be a mirror image of whatever you would see in the futures market, because the futures price data, while they are closely similar in terms of the spot market related to the dollar, um, it's important you understand what the relationship is. It may be a mirror image based on what we're describing here, um, if it's not the base currency in the pair. Okay, so in other words, um, if it's the Aussie on this side here and not here, obviously it would be a mirror image of everything we're expecting in the charts as we're discussing it. But moving ahead, let's look at a little bit closer view of that Aussie. This is a cash price again. And I want you to take a look at under the chart here we have this graph. Now if this is the first time you've ever seen a net trader's position chart, it can be a little bewildering because you probably don't understand what it is it's measuring and what it's plotting and what's the cumulative basis of this information. Without going through a whole treatise on the concepts of commitment traders and CFTC position reporting that takes place on a weekly basis, I'll just say this. Um, the CFTC, which is the Commodity Futures Trading Commission, mandates that uh, positions in the commercials which are the large dominant producers or consumers of a commodity. Um, Large institutions, banks, okay, they would be a commercial. Okay, and then you have the large speculators, which would be hedge funds, large private traders, and then smaller mid-sized companies, if you will. And then small specs would be someone like you and I, where we just don't have the accredited staff working with us, or a real fundamental need to be in a particular market. We're just in there speculating. Okay, and that would be deemed as a small speculator. Now, historically, if you look at the red line here, okay, the red line that's being plotted is the commercials. Okay, and as you can see here in the legend, the red is commercial speculators. This is the small specs. We really have no interest in following them. I wish there was a way to toggle that particular group of trader off of the CFTC's data, because it's really not useful at all, I've found. And then you can see here the large specs, which is the green line that's being plotted here. Now, if you look over here, there's a zero level here. Okay, and I want you to follow that line across the net traders chart, because as price, as it does here on the red line, crosses over top of that red line, this is the beginning of what is referred to as a net long position in the commercials. Now, they are both speculative and they are hedgers. Okay, and what do I mean by that? Well, because there are vast, huge, deep pockets in these commercial traders, okay, and I'm just going to refer to them as a bank. Okay, it makes it easier for our discussion as it relates to currencies. The banks are the red line here. Okay, if they are above the zero line, as we just indicated, they are net long, or they have collectively over their entire speculative interest in the Australian dollar, they are more net long or bullish than they are net short or bearish. Okay, so in other words, if there is a make it easy, they have essentially about 100,000 contracts long here on the Australian dollar. In other words, they may have 300 thousand contracts at interest in terms of the Australian dollar. Okay, but net long basis, they have more. They have 100,000 more longs than they do of another side. I guess that really wasn't a good. That wasn't a good indication of or example. It's not 300,000 interest they would have. It would be something like say they had 150,000 contracts, okay, of open interest in that particular currency. 100,000 of the position size collectively is more of longs than they are of selling or hedging into the Australian dollar. So I think it's a better illustration of what I'm saying. Now, the the fact that they swing from net short to net long here, okay, doesn't really suggest that there's going to be a bottom in the market yet. What we want to do is you want to see a diametrically opposed position between the green line, which is the large hedge funds, if you will. They are by definition the trend followers. Okay, now during the meat of the moves, they are generally right, but they are always wrong at the end of the moves. In other words, at the tops and the bottoms, or major turning points in the marketplace, that's when they're going to be at their most heaviest net long, when it's topping out, and when it's net short, okay, they'll be uh, the heaviest net short during the lows in the marketplace. Okay, and you can clearly see that here during this time here at this high, they were